Trading strategy you are using to trade FX or any other asset class, there is a very simple way, a very easy method to increase your profitability in that strategy. As I said, this very simple detail can allow you to increase your profitability or even become profitable if that's one of the keys that was missing for your profitability. This is something I personally implemented in my trading years ago, and it really made a huge difference in my trading, and it's something I actually use every single day. So enough with the teasing, and let's go onto the chart so I can actually show you what's that very easy method you can implement. So let's take, for example, here Aussie Kiwi. So we are looking at Aussie Kiwi on the 4-hour chart. So someone may come to this chart and literally look at the trends, look at support and resistances. So let's do that quickly. We can see we have this trend line coming down, okay, with one touch, which was the extreme, second, 3, 4, and here we had strong indecision, right? So we had this. However, at the strong indecision, you can see a lot of traders may have gone short, okay? Why? Simply because we have that SMA 50, which is acting as resistance. This is a moving average I personally use. That was here. And we had that strong downtrend, okay? We are in a downtrend, and we had this trend line coming with a strong reversal candle that was just here, okay? So a lot of traders would have gone short right here. Now, obviously, price continued and broke through, okay? So a lot of traders would say that may have been a false breakout, a fake out, or just did not respect. But how can you actually predict these moves, okay? The fact that this time the trend line was not respected, okay? The trend line was respected here, however, it was not here. So how could we have known this? And a very easy way to do so, okay, is by looking at multi-time frame analysis. And this is my point in this video, okay? So if we actually take a step back and look at the daily chart, which is right here, for sure when we looked at the 4-hour, we knew, the 4-hour is right here, by the way. When we were looking at the 4-hour, we knew that the trend line was here and the probabilities were for the downside, okay? And if we actually continued looking at, let's say, confluences in this way, we would have probably seen we had some fib levels as well. If we just fibbed this, okay, we were coming to there, rejecting the 61.8. We had many reasons to go actually short, okay? So by looking at multi-time frame analysis and always looking at the bigger picture, we would have seen exactly this, okay? So that's on the daily chart. What we can see on the daily chart is this trend line, all right? And that's without even looking at any fundamentals, without looking at any news, all right? We just saw that for sure during that 4-hour time frame, what we were looking at, we were in a downtrend. There was a descending trend line. However, what happened is that we rejected another bullish trend line, this time on a higher time frame on the daily chart, okay? And this rejection, by looking at multi-time frame analysis, we would have not necessarily know that we were going to see a break, okay, on the 4-hour, but that probabilities for a break were quite high, okay, and we were not necessarily going to see a rejection of that trend line as many traders would have thought, okay, and literally gone short right here. So this is why, if we look at my analysis on Aussie Kiwi, which is on this one, so you can see that my analysis on Aussie Kiwi, I had my daily, which was that trend line. From fibbing this, I could see we were coming towards these fib levels, okay? We can see we rejected the 61.8, basically. Rejected this with a strong bullish engulfing, right? If we actually look on the smaller time frame, we can see this falling wedge. We also had a strong bullish divergence, okay? Showing that there's buyers coming into the market. We had this little sort of double bottom showing that shift in momentum. So why didn't I go short here? Simply because I had all these reasons coming from higher time frames. Does that mean I personally trade the daily time frame? No, okay, because I don't personally hold trades for months or very long time periods, but I do use multi-time frame in order to have better confidences and have better probabilities on my smaller time frame entries. This is exactly why I was personally expecting that break of descending trend line, while a lot of traders got actually trapped going short on that descending trend line, simply because there was these indecision candles and there was this trend line just here, okay? So I'm still expecting price to go up to 1.0938, and I'm actually looking for an entry, so I'm looking for price to come back towards these fib levels, towards interesting levels, in order to find buying opportunities. Now, another example of this, let's look at dollar yen. So this is dollar yen, and it's actually a position I am currently running, so I'll also show you my running trades on this. But any trader right here would be in a very similar situation as Aussie Kiwi. What can we see? We see this bearish trend, okay? And we probably have a trend line, okay? So if we put it in, we do have this trend line, okay? We have this trend line which was started right here Okay, we had this touch, another touch, third touch. So we are expecting that the fourth touch would probably be a reversal from that point, okay, and we would see a lower prices as well, okay. So all that is going well, and as you can see, I used the replay button, so you can use it here, replay button, to see what would have happened, okay. So we can see that price continued, and from that point, at that moment, a lot of traders would have gone short, okay, which is understandable, simply because the trend is down. We are coming to a descending trend line. Why wouldn't you? Okay, probabilities are to the downside. However, boom, what happened? Price actually broke to the upside, okay. So a lot of traders would have thought, okay, this is just one trade, one loss. I couldn't have expected that break. However, yes, you could, okay. So let's actually remove the replay button and look what the live market's doing. So as you can see, price really rallied after that. But what did we have? If we just concentrated on the 1 hour time frame. So for me personally, I execute my trades generally on the 15 minutes, okay? So I do trade the 15 minute, but let's say you were trading the 1 hour. So that's the time frame you're interested in. Why the fuck would you look at daily or 4 hour other time frames? Simply to avoid these type of stupid mistakes, these type of stupid trades where you would go short and the whole market is long and you don't even understand why, because you're not looking at the bigger picture. So now let's have a look at the bigger picture, okay? By the way, when I'm looking at charts like this, I have my daily on the top left, I have the 4 hour time frame on my top right, I have the 1 hour on my bottom left, and I have the 15 minutes on my bottom right, okay? This allows me to see all the time frames at the same time without having to switch screens, etc. The way I do this is by using TradingView and having the pro version of TradingView. So you do need to have the pro version of TradingView in order to do this. However, down below in the description, there is a link to TradingView where you can have a significant discount on your pro subscription to TradingView. So yeah, just wanted to clarify this because I know people will ask me how am I getting several screens on one and only screen. So let's come back to the multi-time frame. Let's look at the daily, okay? What was happening with the daily is that we obviously had this very strong impulse. We came back, okay, cool. This is the downtrend we were looking at on the 1 hour time frame. However, on the daily, very similarly to Aussie Kiwi, we had this big, okay, bullish trend line, which was coming like this. And we have this one touch here, second touch, basically three touch. We had four touch and a fifth touch here, okay? And you can see that price actually rejected this and then the trend line broke, right? And by looking at this daily time frame, we expected this trend line to break on the 1 hour time frame, okay? And we didn't get caught in this move. So now let's look at how I actually traded this. So these are my position on dollar yen, okay? So I like to look at it on the 2 hour time frame. So what we can see is basically we had this trend line I was talking about, okay? That big trend line coming up, and also fib level. So if we fibbed this, okay, literally we fibbed this whole move, this impulse, you can see that price came back towards the 50%, 61% fib levels, okay, and actually rejected it. Once again, when looking at it, we have this strong bullish divergence, which was hinting into buyers coming back into the market. And why didn't we short this? Simply because we had those reasons from the daily time frame. So do I trade the daily time frame? Once again, no, I do not. I trade the smaller time frames. However, I took a trade on the break of this because I was expecting that upside and dollar yen to come back up towards 110.80. And now just to show you very quickly the idea behind my trade. So I took the trade on the break. Okay, I also had fundamental reasons to think dollar yen would see an increase. May is generally a very positive month for the dollar when we look at seasonality as well, but that would be another subject. So I took the trade here, had my stop right here, which would allow price to come back for a retest. Price continued. Now you can see I said 50% profit out right here. What happened is that we had this strong impulse, and we had an FOMC report at that moment, okay? So do I want to hold a trade at that moment? Not necessarily. Did I close all my trades? No, because I still have reasons to think we would see more momentum. So what happened is that I just took 50% out of my profit to remove leverage, to remove volume from those positions, okay? So just before that FOMC report. That FOMC report caused the price to drop. However, there was no real catalyst for some dollar bearish momentum, okay? So this is when, if we look at this and we fib it, we actually came towards the 38.2, so towards the fib retracement levels. And this is when I took a trade again and basically added those 50% I cashed out before, if that makes sense, okay? So I did that back with stops just below those 61.8% level, as you can see, and below this previous congestion zone, okay? And we can see that price really reacted to that SMA 50 nicely. So that's why I took the trade again. And so that way I was able to, first of all, cash out 50% of my first position, add those 50% back, while keeping it, because I actually reduced my risk, and the original stop was also trailed to that new stop, because it would be stupid to have two different stop levels. Okay, so this is the idea behind that dollar yen trade. But mainly the idea I want you to remember is the fact that even though you trade a certain time frame, even if you are a scalper, let's say, and you trade the tick chart, or you trade the 5-minute chart, it's always important to look at the higher time frames. If you trade the 5-minute chart, okay, it may be not necessary to look at the monthly. However, if you trade the 5-minute chart, it may be important to look at the 1 hour and the 4-hour time frame to see what's happening and to be on the same page as the global market, because you don't want to find yourself in positions like we saw on that dollar yen, like we saw on that Aussie Kiwi, where you have a very clear idea, you are seeing a specific trend. However, other traders that are trading different time frames are seeing something completely different, and you get wiped out because of this. So this is something very easy to implement. However, a lot of traders do not implement it, either because they don't know how to use it properly, or also because they're just lazy to look at different time frames. Okay, it's much easier to look at all the different pairs on, let's say, the 15-minute time frame. This is the time frame I personally trade, and just go through every single pair like this. It's much quicker, much easier to do so, rather than looking at all the different time frames. This is why I personally have the pro version of TradingView, and I'm able to see different time frames just in one go, so I don't have that laziness of just looking at one time frame. Okay, I have all the different time frames in front of my eyes, and I can make informed decisions by having the full picture. What are long-term traders thinking? What are short-term traders thinking? And really, having as much information as I can to be as profitable as I could. So I really hope you enjoyed this video and you found value into it. If this is a concept you knew about, maybe this video is just a refresher so you can remember to actually use this every single day, because sometimes it's something we tend to forget about. Right under this video, you'll find all the links to my other social media accounts, and also all the links to my services, such as my trading mentorship programs, my pro analysis service, where I just share my analysis every day and my research. I also want to say a big thank you to all the support I received, and if you have any questions whatsoever, please leave them down in the comments. I'll read every single comment, or you can actually send me a message directly on Instagram, which appears just here. Now remember to subscribe to the channel if you have anything to do with trading, with FX, with investing, with personal finance. I make a video every single Sunday, so I see you next week. Have an excellent rest of your day. It was Elliot.